Welcome to the new video in the series of Elliott Wave video course that I'm making. So I think this is the fifth video. So we're gonna start in this video. We're gonna see how wave one or this wave one, for example, this whole with five subwaves, right? How they unfold and especially within a channel. Like if you're making a channel as a guide, then you can easily, follow these waves if they are behaving good. So they should be making a nice channel according to whatever they're supposed to make, right? So let's get started here. What happened is that in the previous video, we understand that this is what the basic phenomena is. 1, 2, 3, 4, 5, then ABC correction that happens, right? So we're going to cover that this is how this 1, 2, 3, 4, 5 will be unfolding, right? This could be anything like wave 1 or wave 3 or wave 5, because see, this wave 1 has 5 subwaves, right? Like just like this. Wave 3 also have 5 subwaves, just like this whole thing, right? And wave 5 also have 5 waves. So when you're counting 5 waves, it could be wave 5 or wave 3 or wave 1 of a higher degree, right? So, but regardless, we're going to see that how we can measure and understand that which wave we are in, right? So let's get started. The first thing that I would show you that, okay, when the price first, for example, dropping from the top for any reason, and basically the reason is the bad news and the price drop, right? Bad news means worse than expected, right? This news is always scheduled like, GDP, CPI, ISM, all, NFP, all of these rate cut decisions, right? Unemployment rate, all of that have effect on the market, and then market move and create these waves. So now, for example, whatever the news was, and the price drop, and drop, and always price stops, always either support or on the top as a resistance, right? There is a resistance, and then price is stopped there. What are these support and resistance? Basically, the previous highs and lows, right? And then all of these highs and lows are made because of the Fibonacci calculation, okay, compared to the last wave, whatever the wave was. So now, for example, this is how wave 1 and 2, we're going to see that, how wave 1 happened, and then wave 2. So this is wave 1, a small wave 1. In the wave 1 and 1, 2, 3, 4, 5 phenomena, we're going to start from here. This wave 1, this wave 2, and wave 3, and wave 4, and wave 5. So that would be complete wave one of a bigger or higher time frame, right? So this wave 1 and this wave 2, let's see. This is that. This is wave 1, and then ABC correction wave 2, and small wave 1 and wave 2, right? So when you see that after the price drop, and then you see that the price jump because, and then you're aware of the that the fact that there was a good news, some positive news, and then the price rose a little bit, right, and hit a resistance and then dropped in this fashion. So when you can count, or sometimes they are not very clear waves, right? Sometimes it's like in a straight line going to the upside and straight come down to 61%, but we are studying here the theory, right? So we have to go by with that, and then practical, I'll show you that it practically we will see that it could be a little different than the theory, right? Practical is always different than the theory, right? In any aspect of life. So anyway, so this is how you can count it: 1, 2, 3, 4, 5, or ABC correction, or maybe just simply a rise and a fall around 61% after the big fall, and this is what happened. So you say, okay, this could be if it stops here, and then it could be wave 1 and 2. Let's see what happens. Nobody knows what the heck is going to come here, and it may rise a little bit and then boom, drop again, right? Anything can happen, right? And labeling these waves after they're finished is no good. A lot of people do that, right? But how do we understand that this might be what is coming up And how do we trade that? We need to know beforehand that this is what it is coming, and this is the wave that we are in, and then you trade that wave accordingly. So, for example, we suppose that this is wave 1 and this is wave 2, around, let's say, 61%. Then usually it goes, if it is going for a correction, it will be equal to wave 1, like AB equals CD, 100%. Or if it is going for wave, impulse wave, a motive wave, then it will be 1.618, 127 or 161% of wave 1. It will be much higher, much bigger than wave 1. Okay, wave 1, whatever the size is, if it stays equal size, probably it is wave C, wave A, B, C, and it might be a correction if the price drops after that, right? Then you can say that this could be. But how do we know that it is going for a correction or an impulse? Usually, the previous factor will show it to you. Then what happened in the previous? You'll see that the drop will happen in what fashion, right? So when you look at that, you understand that okay, this was impulse. Then maybe this is a correction. Or if this is a correction, then maybe a new impulse is starting. But that is still maybe. Right? There are complex correction, like correction after correction after correction after correction, that can happen. And also the impulse, so 1, 2, 3, 4, 5, people think that it's going to end, but sometimes like 6, 7, 8, 9, 10, 11, 12, keep going on and on and on and on. That's unidentifiable waves can happen also. So, but the thing is here, the theory, for the sake of the theory, that we will see that, okay, rise and a fall to 61%. What we do is that we draw a line, a trend line connecting the starting point of wave 1 and the ending point of wave 2. And then price already started from there, right? So this is probably like a 61%. So we said, okay, this may be the low, and then now we're going to rise from here. So we draw the trend line, and then you take a parallel line from this, and then you place on the top of wave 1 to create a channel. Let's go do that and see what happens. For example, I will maybe here. I saw somewhere very nice channel. Okay, I'll do it here, right? For example, this could be, forget about this. So let's say this one, right? This is with it rise and it fall, ABC, right? Very nice. This is a straight drop, so I'm gonna leave it alone there. This you can say that 1, 2, 3, 4, 5, A, B, C. Okay, how much is this? Let's see. This is exactly 61%, right? Drop. So we said, okay, this some kind of maybe wave 1 and 2, or A or B, and then if it start to rise, then you say, okay, it's going for either C or 3. So what do? We make a channel. How? Like I just explained you, we connect starting point of wave A and or 1 and ending at wave 2. Now, if you're doing this, and if you're going for like this is wave 1 and 2, what the heck is that then? So in a correction, usually comes like A, B, C correction, right? And what happened most of the time is like you have A, B, and then C unfold in 5 big waves. Okay, so consider that okay, this is A. All right, we can live with that, and this is B. So wave C is about to start, and we already have 1 and 2, or A or B, right? Again, right? So we can right here get 1 or A. Let's say, for example, 1 or A, because we don't know what is going to happen. Is it going to stop at 100% as wave C of a correction, or it is going to go more than that, maybe 127% or maybe 161%, and that would be probably C, 3 of an impulse wave. Time will tell. So we mark that okay, this is 2/B. It could be 2 of an impulse wave, or it could be wave B of a correction. Remember always that when we talk about impulse wave, we mark those by numbers, and corrections, we mark them by alphabets, A, B, C, D, right? So this could be both, and then we take the parallel line and then place it on the top of wave 1, right? First thing. So this we did that, and the price is still here. So now at least we know that it is going to go up there, either 100% or 127 or 161. So what do we need to do? We need to get in, right? It's going to go to the upside because it is here. It is stopped at exactly 61%, right? So I will mark that as well, because that way you don't forget what happened. If not, then people forget very easily what they were looking a while ago. Even I forget. I made the chart, I post on the Telegram, and I give it to everyone, and then later on I forget, and I then found out that, okay, now that has happened. 100, 200 pip move already happened, and then I realized that I made the chart and I forgot to trade that. So that happens. It's that happened a lot of time. Oops, what happened here? Okay, just remove. Let me just remove these white lines. I don't want anything else disturbing or okay. Now, so we have A, B, or maybe 1 or 2, and then this is wave 3. That can be also it's all subjective. But we say, okay, this is 1 or A, 2 or B, and then this is also again 1. That happens. See this wave 1 and 2, and then again wave 3 will have 5 waves. There will be 1, 2, 3, 4, 5. Then also you can mark this one 1 or A, 2 or B as well. But this is again the same phenomenon. This is 5 waves, 3 waves to the correction, right? So 1 and 2. Now, and 2 is exactly at 61%. So that is pretty much confirmed that it is wave 2, 1 and 2. Then wave C. Then now notice that the channel, see the price. Now you're expecting what? 3 levels, right? 100%, 127, 161. Let me just open a diagram quickly so that you understand that what I'm talking about, and you also have that in a harmonic pattern course. But I will add that in here as well. But this is called A is equal to B, AB is equal to CD pattern. I need bullish. Okay, so this one, right? So what happened? This is what happened. We just saw that it went up, and then A, B, C correction, and then it will rise. So it is going to go for these levels, right? Sometimes it's a straight up deal, like it goes from here to here, wave 1, then straight up. Instead of 3 waves, it will just simply come with, let's say, 50%, and then without dipping again one more time, a second pullback to 61 or 78, it would just go straight, straight up. So these are the two possibilities. Usually, this is the turning point. Either it's going to go straight or come down here, right? So in our case, right now, we are studying that it came down. It went up. It came down here first, then it went up, and then again it came down. All right, so ABC correction. And after that, what will happen? What can happen? It can go for either 100% or 127 or 161. So let's see how much this one went. So, right, it start to go up and then hit this here, then drop, and then hit it here, the channel line, and drop, and here, and then. Now, by this time, you are pretty good profit. For example, if you made an entry here somewhere, then even the channel TL hit is 115 pip. That's more than enough, right? And after that, you're just watching that. Let's see what happens. Now, if the price stop here and then drop, then this could be a wave C of a correction, because it's AB equal to CD 100%. How? So we use this tool and then we measure that. So we place this point here. So I'm gonna, well, I'll put it here, no problem. And then the second point is at the end of wave 2. First at the end of wave 1, right? Actually first point, the beginning of wave 1, the second point at the end of wave 1, and the third point at the end of wave 2 or the beginning of wave 3. So you notice that this 100% comes exactly at the touch of the TL of the channel. Then it dip a little bit, and below, without going below this point A or 1, it start to go up again. That is a sign that it is going for the higher level. And it went all the way to 127, right? And then it dip a little bit here. And then again, it's to this high. And then again, you see that it went all the way to 161, right? So now this is what we can call that, okay, this could be, see this wave 4, if this cannot be wave 4, if we can say the 1, 2, this is 3, and then this is wave 4. Wave 4 usually, it can be, but theory calls for that wave 4 is usually bigger than wave 2. If this is wave 2, then I see that this wave is not bigger than this, right? Even time-wise, if you look at the time-wise from here to here, the distance, right? It is not that much, right? So this cannot be, theoretically, this cannot be wave 4. So this whole thing was like maybe 1, 2, 3, and then 4, and then 5 to 161%, and that is wave 3. So now this cannot be wave C, it is wave 3 now, right? Because it's all the way 1.618. So you can change this now to 1, and then this to 2, and then this for wave 3. Right? You can type it, you can copy that and then change it, whatever, a different way, right? If this is wave 3, then we need wave 4. We need wave 4 bigger than this. So now this thing starts to drop. Now we need to find a target for wave 4, right? So what we will do is that we will stop this video here at wave 3, okay? So I'm gonna take it from there to wave 4 and wave 5 in the next video, right? So just, we created this channel, that we started to create this channel, we connect this TL, and then we place the parallel of the TL on the top of wave 1, right? First one was beginning of wave 1, the end of wave 2, we connect these 2 points and create a trend line. Then we take the parallel of that, we place on the top of wave 1, at the end of top of wave 1, and then you see that the wave 3 will also always will go and break the upper TL and go beyond to 127 or 161. So in this case, 161, so we mark that wave 3. Now, in between going to the upside, wave 3, if you said that if this is wave 1, wave 2, you get in here, from here to here, let's say, for example, your entry is here, and then it goes here and place a reversal candle here, right? Reversal means it's dropping. So you close here. That is 70 pip, 73 pip, right? My question is that, is it good for a day? If it is good for a day, then you close it. I would close it, right? Then it dip a little bit and then create another entry. This is my another entry. My entry conditions, we have 4 conditions. So yellow must be above the black. This indicates all the way down. So it's a beautiful next setup. And then again, you get in here and you pick up another one at the channel hit. You pick up another 60 pip. Then it dip again here and then create another entry. This is a 20-minute chart, by the way, right? So this is my main entry chart. You create it, and then again, maybe the next day, it start to go up again. Then you get in here, that's 60, 70 pip again. Then it comes down here, right? And then it start to go up. So you get in here and it goes up a little bit and then it backfires. So my setup is always require hard 25 pip SL, hard 25 pip, right? So here, you made 70 pip here, 60 pip here, 70 pip here, then you lose 25 pip here. No big deal. Then it drop here, and then again start to rise from here, and then from here you go all the way here, and you pick up 120 pip again. So you 120, 70, 60, 70. minus the 25. That's it. But this is how I usually, you see a lot of trades, this is what happens. This is how I get, knowing that, okay, this is wave 1, 2, then we can go all the way to 161, and every time it dip and then start to go up, I get in, right? After that, it start to come down here, right? Now you see the distance between the yellow line and the red line is getting bigger and bigger. So this is called threshold. So when it's too much, I don't go long. And especially when I count this 161, I know that is the end of the road. So I'm going to wait until this wave 4 is finished. Maybe it's going to be in like 3 waves, or we'll talk about it. It's a little complicated. Wave 4 is the most dangerous, complicated wave of all these waves, right? Very, very dangerous. So we'll talk about that in the next video, right? So this is how we measure using these tools, and this is we creating the channel. So we're gonna create a new channel for wave 4 and wave 5 in the next video. All right. So till then, bye-bye and have a good night, because I have a night here. So I don't know what you have and which part of the world you're living, right? Maybe a day, maybe a night, right? So have a good day or have a good night. Talk to you in the next video.